the U.S. economy, the labor market is tight, secularly tight for those of you who read my tweet on every Thursday about this point. Um, and I think that we had an incredibly hot labor market in 2021 and early 2022 that has since cooled very modestly. You might call it normalized relative to the post-COVID boom. But the challenge with the labor market, challenge or not, but the reality with the labor market is that given the secular demographic experience, it just doesn't take that many jobs to keep the labor market, reasonably tight. We have labor force growth. Of course, there's a lot of ambiguity about this point, but let's call it a million, to 1.5 million jobs, let's say, in terms of labor force growth. Okay, well, what does that mean? That means payroll employment goes up by 100,000 a month, and labor markets are more than 100,000 a month, and then labor markets are still pretty tight. And so you look at that and you sort of say to yourself, well, I mean, 100,000 jobs a month is just not that many jobs. And so when people look at these payroll reports, I think a lot of people are focused on the fact that they've moderated from 500,000 jobs to 150,000 jobs, but still that's a fine situation to be in. And so what that means is, with labor markets continuing to be relatively tight, even with moderate growth in employment, that there will continue to be labor shortages in to some extent, structural labor challenges, labor hoarding, and more higher wage growth than would otherwise be the case. And that's essentially what we're seeing, is that even though there's been like a bit of a softening of the labor market, if you look at and wage growth has come down from in the let's say in the 5 to 7 range, we've now fallen into the 4 to 5 range, depending on your measure of choice. But that's still a couple percent above where it was pre-COVID. And that's important, right? Because pre-COVID, we were at essentially the Fed's target when it came to inflation. If we have, let's say you just assume that we have the same labor productivity dynamics today as you did 5 years ago, and you have nominal wages that are growing at 2% higher at a 2% faster pace because of embedded inflation experience causing a bid for wages, plus the tightness, combined with the tightness of the labor market. Well, the Fed can't get back to its mandate under that circumstance.